A profitable trade recap and a brand new trading idea for the current day. That is what I will be providing you guys with in today's YouTube video. First off, let's go over the educational trading idea that I actually entered early this week on Near protocol. First off, let's have a look at the structure for Near that was looking extremely clean. We can see that we were still range bound with a range low area over here, and that over here we had this very pretty range high area over here as well for Near. Now what we could see over here is that we were pushing towards the upside, and that while pushing towards the upside we were leaving behind some liquidity beneath the low over here. We can see our price mitigate that liquidity pool. After the first mitigation, and this is where stuff started to become very interesting to me, we saw a bit of a bounce. Now we can see that while bouncing over here on towards the upside on the 1 hourly time frame, we were not breaking any structure towards the upside. The structure was simply still very much to the downside for Near. When we zoom into that bounce on a 15-minute time frame, we can see something even more interesting, and that was this fake break of structure over here, right? This was not a significant high to break, and along the way up we were forming some low time frame fake break of structures in the local trend as well. Now what are these fake break of structures doing? They're engineering liquidity beneath the lows over here and the low over here. How so? Because of the fact that people identify this as a valid break of structure. So these are breakout long in the price of Near, right? With their stop loss beneath this low or beneath this low. So by creating these fake break of structures, we're engineering liquidity to the downside. So what does price do? It starts to be attracted towards that liquidity pool. We push towards the liquidity pool and we start moving sideways. And this is something that I absolutely love. You guys know that a sideways movement inside of a valid liquidity pool, and once again remember, a liquidity pool is not as simple as just marking out a high or a low. A liquidity pool is being engineered by certain price action from the past, right? That is creating certain human reactions and certain human behavior, and therefore people are placing their stop loss somewhere. Now because of the previous price action, people were placing their stop loss beneath those lows. We were engineering that liquidity, and when price starts moving sideways inside of a valid liquidity pool, it is often a sign that smart money might potentially be accumulating some orders, which is exactly what we were seeing over here. Now the sideways movement led towards a low time frame PO3, in which we had sideways movement, aka accumulation, right over here as I explained, right? That accumulation led towards manipulation below the range low, and that led towards major expansion higher for Near protocol. Now that expansion higher was very interesting because that expansion higher gave us a valid break of structure over here. Why was this a valid break of structure? Because the high over here that we break through is a significant high to break. How so? Because the high over here brings us to a lower low over here compared to this low that brought us to that high, and therefore this over here was a valid break of structure. Now let's quickly talk about the draw on liquidity, and let's have a little bit of a lesson over here. When we look at this previous price action, and let's say we were still trading over here, when we have to look at a certain draw on liquidity, most people would mark out this high over here as their draw on liquidity. Let me teach you guys a little bit of a lesson. The draw on liquidity is always the second to highest high or the second to lowest low, and not the highest high and not the lowest low. So mark out the draw on liquidity over here. We can see that we had a beautiful front run of the draw on liquidity over here, which means that this high was basically meant to engineer even more liquidity around this area over here, which was a very, very nice confluence. So we got a break of structure towards the upside. That one was being followed up by a fake break of structure over here, right? Why is this a fake break of structure? Because the high over here that we break through was not a significant high to break, because it only brought us to a higher low and not to a lower low compared to this low that brought us to that high, and therefore not a significant high to break, therefore a fake break of structure. What is that one doing? It is engineering liquidity beneath the low over here, which means that we are always interested in looking for longs where other people are getting stopped out. Now let's say price would not have formed a higher high over here, but instead it would have formed a lower high over here. In that case, I would not have been interested in potential longs, because a lower high over here would not have engineered enough liquidity beneath this low for me to be interested in longs. But because of this fake break of structure, I knew that if we were going to take out the low over here, that would be the area where I would be interested in longs, since we have a lot of liquidity that was being engineered over here. We had some beautiful structure over here. Now, what was very nice about this manipulation is the fact that it also, if we go to the 15-minute time frame, tapped into this strong demand area for near protocol as well, and by tapping into that demand, it showed that bulls were in control. Very nice structure being developed. I knew that I was interested once we were going to take out this low over here. Low time frame wise, we had some more liquidity resting beneath this low, so I wasn't gonna be too greedy with my entry, and therefore I only want to play the highest probability setup possible with the best entry possible. So this was the area where I started looking for longs on near with my invalidation beneath the low over here. And I will explain in a little bit with some statistical confluence why this was a high probability invalidation and why there was also a high probability to form a new weekly high, and then targeting the drawn liquidity over here as my first take profit target for a beautiful RR of 2.4. Let's see how this trade played out. Eventually, as you guys can see, we filled our order and we pumped it a lot higher for near. I'm still running this trade. I took 50% profits at the first take profit target, and now I'm waiting for higher prices on near protocol. What we are looking at over here are the statistical confluences that I was looking at the time of entering, which was on a Wednesday. We can see that we formed P1, aka the weekly low, over here on Tuesday during hour 1, right? We can see over here, Tuesday hour 1, this is where we formed the weekly low before we expanded higher. We can see over here, at that time before we entered, the weekly high was formed over here on Tuesday during hour 16. Now, how does this weekly timing confluence give us some very nice confluence for our invalidation? Because we can see that the P1 is almost always formed on Monday or Tuesday. The last time that we did not form P1 on Monday or Tuesday was 14 weeks ago. At that time, we formed it on a Wednesday. We can also see on the other hand, the P2, aka the weekly high, the last time that we formed that one on Monday or Tuesday was 13 weeks ago, and most often we form the weekly high on Friday, Saturday or Sunday. We can also see that with the percentages, right? 18 plus 23 makes 41, plus 31 makes a 72% chance that we are going to form the weekly high on either Friday, Saturday or Sunday, and we had a super high probability for the Tuesday low to hold based on the weekly timing statistics. So that not only confirmed my bias to see higher prices and take out the weekly high over here later during this week, which we indeed did, but it also gave me a high probability for the invalidation of my trade to hold, aka the weekly low that we formed during hour 1 on a Tuesday. And this way I got my invalidation both based off market structure, liquidity and the range, but I also got my invalidation confirmed by the confluence of the statistics dashboard. On the other hand, the statistics dashboard was showcasing a high probability to get a further bullish displacement as well during the week, and that it was very likely to not form the weekly high on a Tuesday, but rather on a Friday, Saturday or Sunday. And this way I use both my trading system, aka market structure, liquidity and the range, in confluence with the statistics dashboard, and that way I got myself a very high probability and highly profitable trade on near protocol. Right now we are going to dive into INJ, which is looking extremely interesting for a potential long for the remainder of the week based off market structure once again, liquidity and also the statistical confluence as well. Now first, let's dive into the statistics dashboard on INJ and see how this is confirming my bias for the remainder of the day and the remainder of the week and providing me with a high probability invalidation. First off, let's look at the daily timing statistics. We formed the current daily low during hour 1. We formed the current daily high during hour 6. Now we can see that very often we form the P1, aka the current daily low, during the first 4 hours of the day. 1 day ago, 3 days ago, 5 days ago, 11 and 10 days ago. Right? On the other hand, we almost never form the P2 during hour 6. It only has a 1.9% chance of holding. Right? We can see that most often we form P2 after or during hour 16. 3 days ago, 1 day ago, 4 days ago, 2 days ago, and percentage wise we can see a high probability to form P2 anywhere during the end of the day. Now what is this showcasing to us for the current day is that the daily low has a decent probability to hold because it was formed during the first few hours of the day. The current daily high has a low probability to hold unless we get a P1, P2 flip, aka unless we flip the current daily low and we break it to the downside, because then the current daily high turns into P1 and the current daily low turns into P2. Now based off the daily distance statistics, and this one is very interesting to me, we can see that this metric over here at the top is showcasing that there's only a 19% chance to break the current P1, aka to break the current daily low, which means that there's an 80% chance for the daily low to hold, which obviously provides a lovely edge. On the other hand, there's an 80% chance to get a further bullish displacement compared to the current distance, the bullish distance that price has made so far from the daily low to the current daily high. So the daily distance statistics are showcasing a high probability for the daily low to hold and also a high probability to get a further bullish move compared to the current move that we have seen so far for the day. Once again, providing us with a lovely edge. Now the weekly distance statistics, as we can see over here, are also showcasing a very high probability to get a further bullish move compared to the current bullish move that we have seen so far this week, at 82.3% chance approximately. And then we have a 31.1% chance to break the current weekly low on INJ, which is once again offering us a very nice edge. Now obviously we cannot just enter a trade based off just a statistical confluence, but when we start looking at the structure for INJ, I first off want to start off with marking out the range high area over here. This one is going to be very pivotal. We mark out the range high with a lot of pivots over here, over here, over here, a lot of rejections across the board, right? Now around that range high over here, there was some demand coming into the market that gave us this breakout, this consolidation, and this is where things started to become very interesting, because this consolidation at the top was giving us a lot of fake break of structures over here, right? We can see these constant fake break of structures. I just explained to you guys what these fake break of structures are doing. They're engineering liquidity beneath the lows over here, beneath the low right over here, right? What did price do? It once again was attracted to that liquidity pool. It broke that liquidity pool and it offered us one of my favorite entry models, aka the range perfect breakout retest. We can only play the perfect retest of a previous range high or range low if we have a valid inducement above that range high. In this case, this low was acting as a very nice inducement because there was a lot of liquidity resting over here because of the price action that was going on right over here. An inducement is only valid if there's actual liquidity being engineered below that inducement or above it, obviously. Now we push beneath it, we form the current daily low over here by tapping into that previous range high. At what hour did we form the daily low? During hour 1, a very strong pivot to hold. After forming the daily low, we push towards the upside, and we can now see that we have officially broken structure towards the upside as well, since we opened and closed this candle over here above this high. They brought us to this lower low. Compared to this low, they brought us to that high. Therefore, it was a significant high to break, and therefore this is a valid break of structure and is giving me the trigger to start looking for longs. You guys know that I only want to enter where other people are getting stopped out. Low time frame wise, what is very pretty is that we have this potential fake break of structure over here that is engineering liquidity beneath the low over here. Now I think there will be some liquidity resting over here, so my plan for INJ is very simple and very straightforward. I'm waiting for a sweep and I'm hoping for a sweep of this low to then start looking for a long position once we take out this low with my invalidation beneath the current daily low, and then I am targeting higher prices for INJ. We have a beautiful drawn liquidity over here for INJ with these relative equal highs, and I'll be targeting those equal highs. But first, I'll be targeting this little liquidity right over here for INJ. I don't want to be too greedy, but the structure is just too clean. There's so much liquidity that was being engineered. We beautifully mitigated liquidity pool. That gives us a valid break of structure. Then we mitigate a low time frame liquidity pool, right? Beneath that low time frame liquidity pool is, for example, where we also have this breaker block, that a lot of people always talk about, right? That kind of stuff. I'm looking for a sweep on a low time frame to position myself for the remainder of the day, as I expect INJ to form new weekly highs either today, later on Friday, or later this week during Sunday, and in that case we are massively going to profit from a potential long position on INJ, and you can use this low for a potential DCA entry.